what is the income statement? How do you really define the income statement? So again, I'm sharing with you what I'm learning. And what I'm learning is that how do you look at the income statement as a whole? What are you supposed to get from this statement? When you put this statement right in front of you, what are you supposed to get from this? Do you have any ideas? Huh? Can't hear you. If you have any ideas, what do you think it is? What is the whole purpose of the income statement? Well, what I've learned is this: revenues minus expenses equals net income and net profit. How do I break that down to you for it to make sense? Again, I had to look at this one a couple of times in order for me to understand it. Like the first time I watched it, it made sense, but then afterwards, it kind of like I kind of like forgot it. So me talking about it again, I'm teaching to learn and learning to teach. This will allow me to be able to be more effective at being able to teach it, as well as to be able to apply it in my personal life. So how do I do this? Okay, revenues is basically, all right. Well, first let me say this: revenues minus expenses equal net income / profit. Meaning the money that you bring in minus the money you have to pay out or give out. And that will be what is left at the end of, after you do the subtraction. Whatever is left is your net income, what you have left. Okay. So let's break it down individually. Okay. So we're going to break it down individually. So first thing, because a lot of times I know, like when I get into learning and reading about stuff, I don't know about you guys, but me personally, when it comes down to reading things, I need to read it like 1,000 times in order for me to understand it. But when people speak it and explain it to me, it makes a whole lot more sense, and I can visualize and I can put things in its place. So this is what I'm going to try to do. I'm going to try my best to break it down to you in a way to where that you can visually understand it. But first, let's understand this. So again, when you're looking at the income statement, remember, the income statement is your revenues minus your expenses. You might ask me, if you're new to this, what are revenues? Well, to keep it simple, revenues are basically the inflowing of assets, cash, credit, checks that comes into your business from a product that you have sold to someone. What product can you sell to people? It could be physical products. It could be merchandise. It could be clothing. It could be a car. It could be water bottles. It could be a various amount of different things that you can sell to somebody. So those are sales of goods that you're actually giving somebody in exchange for revenue. But maybe you're doing a service. Maybe you're not giving people anything at all, but you're providing them a service. Maybe a consultation. Maybe it's therapy. Maybe it's a listening coach or a life coach. Whatever it is, you're not necessarily giving them nothing that they are actually being able to obtain and take home with them. Again, they are emotionally and mentally, because you're giving them some advice, but it's not, you can't grab it, if that makes any sense. So again, so think of it. Revenues are basically things that you receive from somebody for the service that you provide. So for me, my business more so is a service. I provide a service to people. So because I do mobile detailing, I provide a service. I go to the person's home, I clean their car, and then after I'm done, they pay me. So I received cash, credit, check, one of those three. I don't accept anything else. I receive these three and I accept those as my revenue that's coming back into my company. Okay. So for me, I can also get to the point to where that I can sell products. What do I mean? So after I provided my service, my goal is to possibly in the long term will be able to provide shirts. I may be able to sell shirts to my clients. I may be able to sell chemicals to my client. Uh, Probably just that chemicals, probably some sprays or some air fresheners and some shirts or hats or something of the such. I will be able to sell this to my client. So that would be a product as well as a service. So that now that will allow me to have a little bit more streams of revenue coming in. But we're going to touch on that on another topic. But overall, the goal is that revenues is what I provide to that person, and it would be an inflow of cash that would be received to me. So I give you something, and I give you something, and I receive. This will be considered my revenue. So a disclaimer is this: if I get a loan, or if I get owners that will invest in my company, if they were to give me money, would that be considered revenue? Nope. I thought it was revenue. I was thinking, well, that's money, but I'm not giving them nothing in exchange for it. I'm not exchanging the money. I'm not. Yeah, there's no exchange. I'm not giving them nothing in return for the money that they're giving me. So when you think about revenue, you got to think about what comes into your business. What comes into your business from whatever you sell. If it's a product, if it's a service, whatever it is. And it can also be loans as well. Okay. So now we understand what revenue is, right? We got what revenue is. Revenue can be very shady, but again, just remember, and I'm going to emphasize this again, it's the money that comes into your business. And it can be breakdown in different forms. It could be breakdown in revenue sales. It's just one description of it, meaning that all of the sales collectively that I've earned, if it was through some services, if it was through products that I sold, whatever it is the total sales of revenue that I received. And if it was a consultation fee, if I was there and I was consulting and I was consulting you on your business, I was providing you with any type of service, that is still all the sales that will be brought in. And the thing is that on an income statement sheet is more specific than the balance sheet. The income statement will kind of like break things down in a little bit more details. So have you ever heard somebody like tell you a story before and then they just like miss all the pieces and you be like, hey man, so what happened again? So where did you go? So who was with you? You know, because you try to get a bigger picture of this story because it seemed like it's all over the place. The same thing that happens with the balance sheet. The balance sheet sometimes can look like it's all over the place, but then the income statement kind of gives you the in-between information to give you a bigger picture of what's happening with the money. So in reality, on a balance sheet, you're not necessarily going to see every category that's going to be listed on the income sheet, but it will still be separated with the assets and liabilities, but it's just with a little bit more details. What do I mean by that? A little bit more details will be on an income statement will be, okay, you will have to pay what? If it's money that the revenue that you're receiving in, that would, oh yeah, actually I wanted to show you. This would be better for me to show you. I'm trying to work it out. Here we go. Just so that this can make a little bit more sense. All right. So right here is a good example, right, of revenues. This is what you have. You have lamps and fixtures. We're not going to get into all of this right here, but we're just going to focus on lamp and fixtures. This right here, when it comes down to the, if you can see where I'm highlighted at, it says lamps and fixtures. This is what I'm providing to the person. This is when I go to meet the client or when I'm meeting somebody, this is what I'm providing to them. I'm giving them lamps and I'm giving them fixtures for whatever lighting that they need. And this is the ABC company, right? And this is telling you how much revenue that I have received from it. But then if you go down here, it says cost of goods sold. So now this is cost of goods sold, meaning that it builds down on the fact of the direct labor as well as the material that has been used in order to provide this service. Do that make sense? So my thumb's me, but yeah. But so this means that whatever based off of these lights, these fixtures, this is the ultimate money that I made on there, but this is also the money that I had to use as far as to provide that service. So the cost of goods. So I had to come out of my pocket in a sense to be, I mean, I received this money or this cost of goods from, let me get this right. Let me make sure I get this right. Again, this is where I need to, I'm teaching to learn and learning to teach, baby. So let me step back and do this one more time. So I have lamps and fixtures. That is the product that I am selling. Okay. This is a product that I'm serving as well as a service because I probably have to install this stuff for them. So now it says at cost of goods, that is that direct labor that is being provided of this. So I'm giving of myself to also provide a service to them to install these lamps and as well as the purchase of these materials that I may have. This can also be considered inventory because I need material that's also considered to be an asset, but that's how much the value of the material costs. This is the cost of goods. This goes all in the process of what I will be giving out, but at the same time, what I will be receiving. So if you see this, if you look on the scale right here, it says gross profits. What did they do right here? They added all of this up. They added the 69, the 51, and the 15, right? Let's do this. 69,000 plus 54,000 plus 15,000 equals. Did I get that right? 69,000 plus 69,000 plus 54,000 plus 15,000 equals. So I got 138,000, right? 138,000. You see that? 138,000. On here has 136,000, which is interesting. Because right here, as you see, the grand total of all the cost that comes out that you receive from your service that you provide to them, as far as the revenue that you've received from this, it tallied up to be $205,000 that you received from all of your service through the lamps and the fixtures. So then we do this. We do the 205,000 minus 69,000, which will give us 136,000. So now again, we received $205,000 right here of all of the service that we provided to them, and this is the revenue that we received minus also the service, the goods sold. So the things that we probably had in inventory, like I said, that was being given to them, it tallied up to be subtracting the 69,000 from the 205,000 gave us a total of 136,000 gross profit. So this, our gross profit based off of the revenues that we had, comes up to be $136,000. I hope that's making sense because again, I'm learning as well, and the more that we talk about it, the better off we'll get with this. All right, so now it goes in there and it talks about operating expenses. Operating expenses, what's this? Well, operating expenses is expense. Now let's go into expenses. These are the expenses of this company. The expenses of this company are just as we see. The money that goes out. So again, before we go to this, let me stop sharing this for a second. Let me stop sharing this for a second, and let's break down what it means for expenses. So first off, remember that revenue is things that come into the business as far as whatever services that you provide. Whatever you're providing, whenever you receive money for that service, is revenue. So now expenses is basically meaning that is the outflow of assets representing of cash or providing goods or services for sale. So that means that whatever is the outflow, meaning I have this money that I've had in my company, but now what I have to do is I have to be able to pay this stuff back. How do I pay it back? How do I pay these things off? And let's go back to the screen share. The screen share helps us to understand what this means when it comes down to our expenses. Our expenses is as this displays right here. operating expenses. And in this category, it can be, this operating expense can be labeled so many different things. It could be wage expenses. It could be, it is a plethora of stuff. And as you can see here, it has the expenses that I have in my company. And this is what I'm actually giving out, that I'm paying out. Advertising. $15,000 is being spent of my money, of my revenue, is being spent for advertising, as well as auto and travel. So I have to calculate all of my expenses, from auto, from insurance, from legal and accounting, from utilities to rent to salary, that I have to actually make sure I put down as an expense that could be possibly, that will be leaving out of my pocket from my revenue, that will be going out. And you remember what I said before? It ain't never coming back. It's gone. It's gone for good. I can't use that money. I can't invest it in anything. I can't do anything with it. I just use that to keep my business operating and function properly. And the more I'm being accountable and responsible at paying my bills, the better off I am. So with this, with the advertising, with the auto and travel, with the insurance, with the legal and accounting, with the utilities, rent, salaries, look how much this came up to. It came up to $99,500. $99,500. So now if you see gross profits of my revenue, collectively, what I got was $136,000 that I made of gross profits. Again, but now remember what I said earlier. What is your income? Your income is revenues minus expenses. So we really go down and do the math. We see from here, we see 1,000. Let's do the math together. I got my phone, got my calculator. So I have $136,000, right? Minus 99,500 equals $36,500. So that means that basically the earnings that I've gained after everything has been taken out. Again, remember, net income is what? Net income is revenues minus expenses. And this gives me a total of $36,500. That's what it means. So it means that whatever I receive through revenue minus what I have to pay for expenses, and what's left is my total net profit, or it could be my income statement or my profit. Okay. Sometimes revenue can be confusing because you think that it means everything, but in reality, it means that the money that you have at that point in time. Because sometimes an income statement could be used monthly, it could be used quarterly, and it could be used yearly. So it varies accordingly, but basically you're dealing with the money that you have in your account prior to the year, the month before, the year before, or quarterly before, if that makes sense. So again, I'm hoping that this is making sense to you guys, because ultimately the goal is for you to be able to understand the account sheet. And it's very specific. Again, if you pay attention to the specifics of it, you're not going to get this on a balance sheet. A balance sheet is not going to display stuff like this in a very detailed way. But here you get a little bit more details as far as what revenue, or what part of your revenue was used for certain areas of your expenses. And again, just is for advertisements. They spent $15,000 in advertisements. And this is for year one, as you see right here. So year one, they spent $15,000 in advertising. Again, why is advertising important? In order for you to get more customers to provide more revenue. So is that a value? Is that a good expense? It is, if it's going to bring you more clients. Auto and travel could be the fact of you going to go network or go to these trainings and courses, or even going to the client's home to even install the lamps and lights and the materials provided for the service. Insurance, you got to have insurance for your company if you damage anything. So these are things that just you have to constantly jot down. And it's the same thing when you're at home. You go to work. So you're providing the service. So you're going to a job, you're working for a company, and you're providing them a service by doing whatever work that you're doing for them. They pay you a check. You get yourself some money. You come home and you got to, guess what you got to do? Just like this, the operating expenses, guess what? You got to pay utilities, you got to pay rent, and you possibly got to pay in house insurance, auto insurance, as well as probably security, because some people get ADT, whatever case may be like that, internet service, cable. All of this stuff is your operating expenses, the operating expenses that allow your company and your household to keep on functioning properly. But now your revenue that you get in, which will be your check every month or every 2 weeks, will be up here in the revenue department. This is where you would say this is you're providing. So your revenue for you would be you providing work to whatever company that you're working for. And this will be the gross income that you make minus, and again, all of that will be deducted at the bottom when it comes down to your travels for gas and things of that such like that. So hopefully this is making sense to you, because again, I'm learning, and I hope and you guys are learning with me. And the goal is that I'm teaching to learn and learning to teach, right? And the more we get good at this, the more we'll be able to improve together. And we're going to touch on the rest of this later, because I didn't get that far on my studies on that. Like I said, I had to look at this part again and again to be able to understand it better. But just remember realistically that an account sheet, when it comes down to the income statement, ultimately the income statement is basically telling you revenue, the money you make that comes from outside of somewhere, from whatever service you're providing, you're receiving that money, and expenses, that whatever money that you're receiving, you're taking some of that off to pay it off, and whatever you have left right here is your net income. And so that's why you'll see it break up the way that it was, where it was divided by color. So now that we got through that part, which was a little bit challenging, a little bit difficult. Again, we in this together. We are in this together. Okay, just remember that. What's the next topic up that we would like to talk about?